Hi, it's Ron Wexler with the Wexler Group at Keller Williams Preferred Realty. And this week, we're going to talk about how do you buy a home without having your current home sold. You know, on the stress scale, it goes death of a loved one, divorce, and then tied for third place is losing your job and making a move. So there isn't anything that's even more stressful than having an incredible home in mind and not being able to buy it because yours isn't sold. So today, let's talk about some ways that you can buy your next home without having your current home sold. So right now, the inventory in the United States is about 20% below where it's been at the height of the market. So that means there are more buyers for less homes. And that means it's very hard to buy a home asking a seller to accept your contingency on yours selling. The seller only wants to be worried about selling his own home, not about whether his buyer can sell theirs. So there's some other options for buying a home and making your offer strong enough that the seller accepts your offer over the others, even if you have a home to sell. So let's talk about a couple of those options. So one of the simplest things to do is to get a bridge loan where you take the equity out of your current home, use that to buy your next home, and then sell your home and pay off that equity loan after the fact. That's being used quite a bit, and that's pretty effective. The other choice along those lines is if you have an IRA or some other source of funds, loan that to yourself, buy your next home, and then pay that off. Of course, you still have a little bit of stress because you're going to have both homes at the same time. Although the good part of having both homes at the same time is you don't have the stress of trying to make a move on the same day as you close. So there's actually an advantage to buying your next home first, moving into it, getting it ready in case it needs work. You know, you might need to do some painting or change some colors or carpeting or some minor repairs. You can get all that done and ready to go, and you can move on your own terms. You're no longer waiting for the seller to make it okay for you to make your move. And then after you've moved out of your current home, then you can go back there and clean it up and do any little repairs that might help us get top dollar for the home that you're selling. So usually it works out pretty well if you're in a position to do that. Right, so let's say that your current home is worth $300,000. You have a $100,000 mortgage, so you have somewhere between $150,000 and $200,000 of equity that you could take out to buy the next home. And let's say the next home is $500,000 and you were going to borrow $250,000 and put down $250,000. You should be able to secure the mortgage on your next home at $250,000, use the home equity loan that you pulled out of your current home to make the down payment on the one that you're buying. And then once you get your current home sold, you make your move, get your current home on the market, sell it for top dollar, of course, and then pay off the existing mortgages, the home equity, whatever other loan you might have taken. So, you know, also people will use retirement funds, an IRA or a SEP or something along those lines. Everybody's situations are a little different, so I'm not going to be able to tell you exactly what you should do, but you should be able to get really good advice from your tax advisor or even your lender or an attorney on how to do it. But you can take a loan against your 401k and then pay that back. You can also take the money out of your 401k and you'll have so much time to put it back in without penalty. And we've had people do that. Of course, the high risk is that if you don't get your home on the market and sold fast enough, there might be penalties on that money that you pulled out of the 401k, and it might not be so easy to just put it right back in. So timing-wise, I think a loan is going to be better than actually pulling money out of the 401k, and there's definitely systems that will allow you to take a loan against it. If we were sitting down, we could go through your specific situation and figure out what's best. Also, your tax advisor is probably the best person to ask about that and how it would work. And honestly, what I would do is I would just take all the different options and do the numbers, figure out, you know, how much money am I paying in interest if I do it as a loan? How much money am I losing in potential interest if it's inside of my 401k? What might the penalties be if I don't get it back in time? I mean, you can figure all of that out and just sit down with all the different numbers and decide what's best for you. So now there's also 4 or 5 companies that'll do a buy before you sell program. Essentially what they're doing is giving you a bridge loan or a home equity loan against your current home so that you can buy your next home without having to be contingent on your sale. Some of those programs are very interesting because some will also loan you money to do any work you might need to do on your house. So let's say that you want to buy the next home, you set up the bridge loan, you purchase the next home, and your home needs a roof or it needs carpeting or a new paint job or something like that. That can be built into all those factors. Ultimately, those programs mostly, the reason they exist is they're hoping to end up with your end loan. So when it's all said and done, they want to hold the mortgage on your next home. And so they'll work with you to get into that new home, and then they want to hold the original new mortgage on the new home when it's all said and done. So, the other thing that we use, and we just used this recently, and it was very effective, is we had somebody who really wanted to sell before they bought, or they didn't want the expense of the 2 properties at the same time. And what we did is we actually closed on their purchase, where they used the equity out of their current home, bought the new home, but they rented the home back to the owner. The people living in the home they bought didn't want to leave right away, and they wanted to get their home sold so they could minimize the time that they had both properties. So we let the seller stay in for 90 days after the closing, and the seller covered the buyer's mortgage payment and taxes and insurance. So it didn't cost the buyer, my client, anything on a monthly basis. And then they already secured the home. They knew what their new payment was going to be. Everything was done. And then they fixed up their home so that they could make the move. And we put their home on the market. And their home sold within, I believe it was a week of when the people moved out of the home that they bought. So by letting the seller lease the property back, we were able to make all the logistics work. And again, all these things that we're discussing, I think you really need to sit down with somebody who's seasoned and can go over all your options with you and then figure out which one will work best. But a sale-leaseback works really well. A bridge or home equity loan works very well. And borrowing against your existing funds or 401ks or anything like that works very well. And one other thing I'll just throw in there, because we just did this in our family, is if someone has a relative that has some cash and they would like to earn a little bit of extra interest on it, the whole price of the new home, or the new home, maybe just well, here, I'll tell you the one we just did. They borrowed from a relative enough money to buy the new home and then went and applied for the mortgage and then paid that person off after the fact. And that person basically charged them 5% interest. So they had money that was in the bank earning 3% interest. They made a couple extra percent, and they were able to secure the new home by using funds that way. And actually, what was really interesting is that made them a cash buyer on the home that they bought, and they were able to beat out the other contracts. So if you have somebody that, again, they don't have to charge you interest. It depends, I guess, how close of a relative it is. But if you have somebody that's willing to, basically front you the money to buy the new home, then go out and get the mortgage, then make the move, again, it'll give you a lot more options also. So there's really a lot of ways to do it. A lot of people think I just can't do it, and they kind of back off on the whole process. And honestly, if you wait a year or wait 2 years to figure out some better way to do it, think about our market the last 10 years. How much equity would you have lost if you waited a year or 2 years to make the move? You're much better off making the move now and having the few more years of pleasure in your new house too. If you found this helpful, please hit the like button, subscribe. We'd love to keep you informed and have you informed as new information is created, as we create more videos and have more to share. Thanks a lot for watching this video. We appreciate you. Remember the Wexler Group at Keller Williams Preferred Realty. We love to help people here in Chicagoland and Northwest Indiana. And if you need a great agent anywhere in the country, we can help you with our high-end referral network too. So we're here to help any way we can. Don't hesitate to ask any questions you might have, and please subscribe so we can keep in touch.